Wow, things are not really going well for the market right now. But honestly, I'm pretty excited for the opportunities coming up this week. And let me go ahead and tell you why. But in this video, we're just going to take a few quick minutes to kind of bring you up to speed as to what you should be watching for the market, what I'm going to be watching for the market, and how we can, get some opportunities out of this. So to help bring you up to speed in case you're not already, let's bring up the We Bear Bears to help discuss the bearish case for the market right now. Obviously, we know about Russia, Ukraine. As I'm shooting this video, events actually are getting worse. We have Russia moving in troops to parts of Ukraine where they have, I guess, identified those areas as sovereign nations. So they are saying that they are no longer part of Ukraine and they're moving their troops there. So that's the thing. And then previous issues from before, inflation, Fed rate hikes, supply chain issues, and then two other things that maybe people haven't brought up as much, but strong earnings that haven't really been able to fully prop up the market. We've had Apple with beating expectations and also Nvidia beating expectations, and there's really some strong growth coming up and strong guidance, and yet the market was not able to help keep up these stock prices. And finally, the S&P 500 or SPY, it's trading under the 200 daily SMA, and that's only happened really twice in the past 4 years. The last time was during that, that initial COVID scare, that 2020 crash back in March. And then the other time was back 2018, 2019 transition, back when there was tension between the US and China. So let's take a look at these charts right now and kind of discuss what's on my radar. But honestly, I'm really only looking at a few things. So bringing up the S&P 500 mini futures, let's take a look at this chart, and we can obviously see that this uptrend is clearly broken. So we have the uptrend, we can see that we're making a lower high here, and then we're also trading now below the 200 SMA. And we're at a pretty significant area of support. We have a touch here, we have a touch here, here, and here. So you could say that this is a strong support, and the bullish case or bullish case scenario that could occur, we could get a double bottom here. But I feel like that would really only be contingent on Russia really just kind of backing down, moving their troops away from the border. But as we've, following the events right now, as of right now, it looks like this week, it looks like things are only going to get worse. And all you really need is that one catalyst to really just break a support. And yeah, that is probably what's going to happen. I mean, the futures market has already kind of responded to what's going on with Russia. And today's Monday the 21st, and you can see how the market's been trading. It went from 438 and pretty much sold off all the way to a low of 425 at one point. And, the market is still going. Definitely a lot of fear, uncertainty, and doubt, and this all really just seems to be due to that Russia-Ukraine conflict. So this whole week is really just looking pretty bearish, and you could honestly seem to go with any particular play and you would probably do well on your puts if you're going to be trading that way. But I think the best stocks to probably kind of focus on are going to be like your high growth, tech stocks, stocks with high valuations. For example, let's bring up what happened to Roku last week. Roku had a significant dive, and man, Roku was trading at 490 back in July of last year, and then flash forward about like 8 months later, and after its earnings report, we're down to the 112. So it's basically trading at a quarter of its price than it was at its like all-time highs. So things and stocks like this that have had some pretty massive runs up have unfortunately been punished. Another one was Netflix previously. Netflix had their earnings, and those two are kind of work hand in hand. But look at those crazy run-ups, and then look at those crazy sell-offs. So, a lot of things on the chopping block here. So the ones that I'm particularly looking at for earnings this week are going to be Moderna and Coinbase. Obviously had a pretty crazy run on Moderna, and then a pretty drastic sell-off. And now we have earnings, and we kind of have a descending triangle pattern here, which is usually bearish, plus the overall market sentiment. And this kind of looks like a potential flush to me. Something to keep on the radar. Obviously, earnings are very, very, very risky to play, and you have that increase in premiums on those contracts, unfortunately, but still worth the watch, as well as Coinbase. Coinbase also going to have some pretty high premiums given that earnings are this week. but it has taken a downturn for the past few months now, and it trades direct in correlation with Bitcoin. Bitcoin is not doing too hot either, and we're probably going to see it retest these previous lows at around like 168, potentially even 162. So these are the things that I'm going to be watching for this week, and going to be looking for some opportunities, mainly for just for day trades, because anything can happen. Russia could suddenly change its mind, move troops away, and we may get that V-shaped recovery. Who knows? But that's what's on the radar right now, and I wish you guys the best of luck. And I will leave you with one last thing. I'm going to leave you with kind of an Alamo here to be on watch for, and I've been paying a lot more attention to potential key levels or key pivot points that may be a beneficial area to kind of denote whether the market is going to take a further flush or if it's going to potentially reverse. So the first level I'm going to draw right here is going to be this one, where this current wick ends, and that's going to be, looks like 425 on SPY. The next one is going to be at about 421. And I'm only looking at the first three numbers because that's pretty much how SPY, the ETF, is tracked when you're trading it on a normal index. But basically, any break of those two levels are going to be very concerning for me. So if we do get a break of that 425 level, whether that's in pre-market hours tomorrow or throughout the day, that's going to be the first kind of like hesitation, right? The next one is if we break 421, that just is going to lead us into some potential crazy panic selling. And everyone should probably know this by now, but things are a lot faster to sell off than they are to go up on a rise, especially with things like the S&P 500. So yeah, keep in mind for those levels. And yeah, once again, best of luck trading, guys. It's going to be a little scary, but don't try to go for any home runs. Just lock in your profits, especially if you're playing the short side or the bearish side. It's better just to be consistent in a very, very volatile market like this. So yeah, anyway, we will see you next time. Take care.